So if you haven't heard about Snap, you're probably not paying attention to the stocks. It started yesterday and it continued today, and it's been a pretty big bloodbath in the stock. I haven't done one of these in a while, and I want to take a look at it. I am your host, The Cowboy. This is Elliott Wave Cafe and Chart of the Day. Let's get started. All right, so Snap has been taken down big time. We are at about 12.75, and the stock used to trade very, very close to $90, just maybe not even a year ago. So I wanted to do a little bit of an Elliott Wave analysis on it. If you've done Elliott Wave for a while, you're probably going to not have any trouble with this. But maybe this is more for beginner traders or for people that just kind of want to take a look and see how I'm looking at things here. And there's a couple of versions. And if you want, you can stop the video and try to count these move from this lows to this highs and then from this highs to this lows and see, what you can come up with. This move in here, I don't really care about. You can go just a simple, ABC down, and that's fine. When it came public, it was trading at about, $25, it seems like, and then it went back to $5, and then, it had a pretty awesome rally here. I mean, it went from, those lows 482 all the way back to 82.61. So about a 1,600% rise in price, and then the drop has been pretty dramatic as well. So you've gone from all the way up there, almost 85% right now. All right, so a couple of big rallies and big drops into the stock, but let's jump right onto it and take a look at the counts. So this is what draws my attention first, and I think it's a good exercise, for Elliott Wave, and just figure out how the markets unfold, and then we'll talk a little bit about how could you have told what's about to happen. Was there any way to protect yourself? And, what can you do now? Are there any opportunities? What's going on with this stock in here? So, first thing that I look at is I'm noticing a big move right there. All right, a big corrective move. This is the biggest one in this entire advance. And this is kind of what draws my eye. And anything that's been happening from this lows to this highs, there's nothing really something that's this major as this thing. So, if I'm looking at this, I'm saying to myself, well, that's pretty much a good impulse in there. And then this is another pretty good impulse. So what this does is just makes me think of a very simple A, B, and C. That's kind of what I have in mind, at the first glance of this chart. So let's play with that for a second. I'm going to take this and I'm going to go just because the stock moves from the lower left to the upper right, it doesn't mean that you have to count it impulsive. You can go at a larger degree of trend and just create a three-wave structure. So here is wave. Here is the beginning of the wave A. Let's see. We're going to talk about where we're going to place this, and then this is the end of the wave B, and then this somewhere up near the top here is the end of the wave C. The reason why I left this wave unanchored is because I wanted to see what's the structure in here and what's the best place to place this wave A. So what I do is I go back in here and I take a look, and I'm noticing an impulse of this lows, a little bit of a pullback, and then I see a big rally, which is almost vertical, right? When you see vertical moves, we're thinking that's wave 3. So 1, 2, if that's a 3, then you got to have a 2 below. So 1, 2. Then you have a wave 3 in here, you have a 4, and then you have a 5. You can notice there a wave 1 small, a 2, a 3, a 4, and a 5. So if I place that wave there, what I'm left with is I'm left with this correction, which you probably guessed it. Go ahead and say it out loud and tell me what it is. But you have basically a push here that appears in 3 waves right there. And then you have another move up that appears in 3 waves, and then you have a sharp decline here that's, very, very strong, and it seems to be a big impulse to the downside. So from the Elliott Wave structures, from the corrective patterns, we know that we have 3 types of corrections. We have zigzags, we have, I'm going to do this here, right? We have the regular zigzag where we go, let's say, in an A, B, and C, right? That's our main zigzag, and it doesn't look like that, right? It looks like something different. You have the flat, which has several formations. You can do an A, B, and then, you know, down in C here, or C at the wave, you know, right at the wave A low, or you can do a wave B higher, and a wave C higher, right? That's a running flat. And if the wave C comes lower, this is an expanded flat. So it's the same flat formation in 3-3-5, but this one up here looks like it is a flat formation. It's not a triangle. The other correction, it's a triangle. So you have a zigzag that I showed you, have a flat, and you have a triangle. So there's no triangle there. Triangles are converging, and you know, it doesn't look anything like that. So I'm going to take this and place it in there. So that's a running flat. An expanded flat, so I'm going to go wave at the beginning of the wave A there. That's a 3-wave decline in wave A. That's a 3-wave advance in wave B to new highs, and then the mother of all sell-offs, which is a sharp wave C decline. And I'm going to pause here for a second because I think, you know, what's important to know when you have flats and when you have a C wave of a flat terminating, usually you have a big subsequent rally coming in the markets. And this is just one of the clues that you will know if that's a flat formation or if it's something else. So if you're looking for a flat in any market, especially for an expanded flat, you know, let alone the running flat or a regular flat, because they all lead to strong upside moves. But I think even more than anything else, these expanded flats are very notorious and very, very, very tricky. Very bloody on the way down as well, because they fake people up in the B wave and then they drop sharp in the C wave. But what happens is that the subsequent rally is sharp as well. So this is how you recognize this a flat. If you're starting to get a move that starts to look very strong from these lows to these highs and continue to pump, then you know this is a flat and you're running much, much higher. So that's how you can tell. Wave C of a flat is very, very sharp. Okay, so you're not going to find wave C of a flat in a, you know, some kind of an ending diagonal or, you know, just a kind of a wave that kind of looks like, you know, drawn out like that. You know, that's usually not going to be C wave of a flat. It's probably going to be something else. Wave C of a flat are very sharp, very down directional. They don't have you, they don't let you breathe, basically. You can't even get out. By the time you go to sleep, you come back, this wave C is like down. In 2-3 days, you're out. So that is the characteristic of a flat. I wanted to talk to you a little bit about that. But so anyway, that's an ABC. And you could have thought, hey, you know, what if this is, you know, a third wave, or, you know, how long can this travel? Well, this is an example because people always argue like, hey, how far a wave C of a flat can actually travel? You know, is it 100%? Is it 138, 161.8? Well, let's check this one out. You know, this thing traveled 261.8 multiple of wave A. Okay, so there you go. That's a clean example here that sometimes flats, C wave over flats will do that to you. Okay, and they're very sharp, and you know, you'll be like, you know, you're going to zero, and it's all it is just a wave C over flat, 261.8. Something that you don't see that often, but they appear. And you know, here it is. Just stopped right there. So anyway, you have A, B, C, and then you begin another advance in here. So what I'm noticing, right, it's a pretty strong impulse. 1, 2, 3, 4, 5 for a wave 1. Very short wave 2, just like kind of Bitcoin had. So wave 1, wave 2, then you have the big rally, right? That's the big third wave, just like kind of what you had back in there. That's the third. So 1, 2, third of a third. Then you come down in a 4 and you go in a 1, 2, 3, 4, and 5 for a wave C. So let's do that. So I'm going to go here, very long wave 1, pretty long, very unusual, right? With the wave, very small wave 2. When you get such a small wave 2, you know, hard to tell at the time, but you know, that's pretty much a very strong underlying market. So you're going up in 3, you're going to do, you know, I think this is a zigzag in here, an ABC. So you go in a 4th, and then you go 1, 2, 3, 4, 5. Now, you can see in here how far the C wave traveled. So just a little bit above 161.8, if you look at that way. And then if you compare C versus B, because you can do it in reverse, right? The C wave versus this B wave, 261.8. So both these, let me just spin it, and I'm going to go C versus A, ratio analysis, C versus A. You can notice, right? Look at that confluence of levels right there, right? 1618 of C versus wave A and 261 of C versus wave B. So sometimes in situations like this, you can start to tell that there might be some serious levels up into those zones, and this in this way you're approaching the top. I'm just going to have a sip of coffee. Guys, by the way, since I'm having this coffee here, don't forget to subscribe and like to this video. I think it's important. If you like it, if you think it's something that's helpful to you, share it around. Also, don't forget about my pro room. If you want to visit and trade with me and see what we do there every day, we have still a pretty good promotion going on. 2 months for one. It's another 7 days that you can take advantage of this thing. Okay, so. The link will be below this video, so go ahead and try that out. But anyway, this is ABC up here. So 1, 2, 3, 4, 5. Now, what I wanted to draw your attention to, check out this RSI. Check out this RSI below here. I mean, look at this thing. Where it hit a peak of 87, almost 90 into the RSI as this market was climbing higher, right? And you'll be like, oh my goodness, we should short this. And then they kept climbing higher. The RSI continued to diverge, right? But this wave structure was not over. So you needed to have some kind of a fourth wave in here. There were a couple of smaller ones. You needed to have a proportionate fourth and then a pushback higher in fifth, and the RSI was continuing to drop. So this was a major signal along with this levels back in here, 2618, 1618. So I'm talking in the past, but and maybe, right, it's easier to look at it that way, but you can take all this information and use it in real time in any stock analysis and in any crypto, whatever you're doing, because these things will continue to repeat. This fifth wave, since this wave 1 was so strong, usually you're not going to get a fifth wave that's as strong as a wave 1. So let's just kind of look at it. Alt5, 5 versus 1 plus 3 was just about 23%. But when wave 1 is extended, I'm getting a little bit of a different ratio. Let me check that out. Alt5, 5 plus 3 V1. This is 5 V1, 618, so 38%. And then I have 5v4, 5v3, 38%. So I know there are some interesting fib levels in there. None of them are super exact, but the idea is that when you have an extended wave 1, then you see almost equality between wave 3 and wave 1, because if you look at this third wave, 3, right, it's 100%. Look at that. So when you see that, don't you expect a very strong fifth wave? It rarely happens, right? You're either going to get a super strong one with a big extended fifth wave, which is not the case in stocks, right? Those things happen in commodities: corn, oil, gold, copper, anything else under the sun that's a commodity, grain, stuff like that. When people are desperate and scared, those fifth waves are going to get that big, but not in stocks. So, this was a second clue that this fifth wave is probably not going to be that strong, and it was kind of drawn out. You could see the RSI dropping in here. If you looked at the moving averages at the time, you started to get a bunch of overlaps in here. So this was, this was a big clue that the market is about to do something. So now you have an A, B up in C, and the market is turning on you. So what it does, and here's the thing: you might have thought at the time, that this is a third wave, right? Let's just kind of play that game for a while, because, why not, right? You could have said, okay, this is the beginning of the wave the wave 1, right? You still get a flat in 2 in here, and then this would have been a third. You should have done a fourth and a fifth, right? There was all the reasons to believe that this was actually going to be a 5-wave move and it was going to continue higher. Everything, it looked pretty good, and it was, this market was trending. You went up into that, nice percentage in there, 161.8, right? C versus A. So that's a standard third wave advance, right? But guess what? Every once in a while, things don't happen the way you think they're going to happen. And, what does that mean? Well, life means that it's got something else in store for you, and you have overvaluations, and Jay Powell raises interest rates and things like that, and here you are crashing from 90 back to 1275. So how could you have how could you have identified that? Now, let me just kind of go back to a clean chart and just do that, so it's a little bit cleaner. So I'm going to go here and go very simple. Let's say 1, 2, 3, 4, and 5. So maybe you thought, right? Because if you know your rules and guidelines, since this move was a flat, right, the second move, and it was pretty sharp in direction. Check this out. Check how far the second wave pulled back. 61.8. Just an amazing pullback for a second wave, right? So 1, 2, then you go up in 3 into the 1618, right there, just a little bit higher than that, right? Which is fair. And you're like, man, this is a third wave. I'm going to get a fourth, and we're going to rally to the moon here. We're going to do a fifth wave. And this is what happens. You're getting a move from this lows to this highs, and it happens, 1, 2, 3. And then you drag along and you drop lower. And not only that, but you come below this level. Okay, that's a very important clue that something is going on. So usually fourth wave in here, if you're going to get a second wave, this fourth wave here should have been ideally a triangle like that would have stayed above those levels and did something like that. So 47.92 was a key zone for this stock to be considered that a fourth wave is going to be at hand. And instead it continued to drop lower. So this was, guys, the moment you see something like this, is like, you know what if it's not a fourth wave? What if this move is impulsive? It looks like 1, 2, 3, 4, 5. It doesn't even look like an ABC, because as we know, triangles begin with an A, B, and then down in C, right? That's what you get. You're going to get a zigzag, maybe a double zigzag in rare occasions. So this was an impulse. So once you get an impulse off the highs, that's your first clue. It's not a fourth wave. If it's a fourth wave, it's going to be deep. And I don't know, the second wave was already deep, so this fourth wave, it's probably not going to work. So if it's not a fourth wave, then what is it? Because it's very hard to be a 1, 2, 1, 2 after you've had such a strain, such a long move. And, those clues right in there would be like, you know what? I think it's time for me to get out. So if you've enjoyed the rally in here, or, you're looking for a place to save your ass, that's 47.92 was that clue that is like, hey, this thing is probably going to crash lower. If it's going to do something else in here, we'll jump back in it, and, we'll probably enjoy a fifth wave higher. But the moment this happened below 47.92 in an impulse, 1, 2, 3, 4, 5, at the minimum, you're going to get a big zigzag, right? And the chances for this to be something like that, I think they would have been, quite small, especially that you've already had a second wave like that. So if anything, a triangle, right, should have been a triangle, or let me give you another option, should have been what? A complex move. So you could have done a combination in here where it's going to go in a W, X, and Y, and do something like that where it's more flat versus this one, and only then push to the upside in this fifth wave. So if you notice, Elliott Wave, it's all a decomposing of thoughts, analysis of what should happen based on this. What if this doesn't happen? What's my next option, right? And this is where we learn and we struggle sometimes to identify this clues that the market gives you. That's why Elliott Wave is so cool, because it's a clue-based methodology. It's an evidence-based as well, right? So the market hints you all the time, gives you this, gives you that. Things look a little bit better, things look a little bit worse. What is this? What is that? So, I wouldn't rush to necessarily place and be sure that this is a third wave followed by a fourth and a fifth. Always think, man, what if it's an ABC, right? And this thing kind of crashes lower. Keep that in mind. Keep that in mind. And that's, that's going to go a long way in your analysis, because it's going to allow you to, to kind of stay flexible and, read the signs, and you'll get better over time. So anyway, so that's how this is how you could have the market told you that it's probably a problem. Now, some other people use moving averages, and, you look for trend followers and things like that. So you're above the 200, continue to trend. The moment you break below this one, the moment this one crosses over, you break below these levels, the market is hinting. You're like, listen, you're already in a downtrend here. Be very careful. Plus, you had a big gap drop in there, right? That's when you have a gap like that in the beginning of a move. It's like something serious is going on. The stock is sick. It's gonna explode to the downside. Something bad is gonna happen. So, those gaps are very notorious. You have another gap here. Now, I wanted to show you something else before I move on. So, maybe I made a mistake, right? And maybe this count in here to this, ABC. I'm gonna delete this back in there. Maybe it's wrong. Maybe it's not right. right? Maybe I'm missing a couple of subdivisions in here, and instead this is like that. And it's, you know, a 1, 2, then you have another 1, 2, maybe a 3, a small 4, and a 5 in there. I'll just kind of look at it. So you can go the same 1, 2, 3, 4, 5 for 1, A, B, C, and flat. You can go 1, 2, 1, 2, 3, 4, 5, 4, and 5. So here you can do this as well and go 1, 2 in here, right? That's another 1, 2, 3, 4, 5 for 3. You have maybe a flat in 4 up in there and then 5, right? So you're, yeah, right there, right? 1, 2, 3, 4, 5. So, and then you get a fourth, and then you get a 1, 2, 3, 4, 5, and 5. Now, you know, this is where the arguments are, because look at this fourth wave. Look how small it is in time versus wave 2. So I'm going to do a time analysis for V2, and you can see that this wave only traveled about, you know, between 23% and 38% of this wave 2. And usually, fourth waves, you know, they're usually at least 100% of a wave 2. So I'm just kind of going back to this exercise. But this is one of the things why I don't necessarily like this, because of the way this looks. I think that this belongs to this entire sequence, and it does not belong to the larger degree sequence, right? This fourth wave in here belongs to the second, and not to this second back there. It's all about, you know, where is the higher degree of trend. So I don't necessarily like it, but if you think it's better, you know, and that's maybe a wave 1, maybe right now you're doing a wave 2. This, you know, just like I said, stay open. This could be an A, this could be a B, and this could be a C wave. Okay? And you're coming back, and you're pulling back and say, wow, that's an impulse. I'm getting a pretty deep second wave pullback in here. What's going on? This is, you know, the pullback in terms of a retracement. It is right there below 61.8. So you're getting kind of on some extreme limits for, let's say, for such a deep second wave. Well, if this is a second, or even if this is an A and this is a B, that means that snap, whatever, whenever, right, is looking to something like that. I don't know if that's going to happen or not. I have no idea. Nobody knows if this thing will ever recover. Maybe it goes bankrupt. Maybe, you know, somebody buys it and it disappears and it goes into, I don't know, maybe they take it private. I'm not sure, right? But remember, you had a pretty big sell-off in here. Now, mind you, this was the pandemic, so it was an extreme situation. This one, it's not as much an extreme situation. It's more of a, you know, a devaluation of all these things that were, you know, going crazy without probably making a lot of money, and the market just said, you know, screw you, you know, you're not worth that much. So here's what you're worth right now: $12.75. Might be low, might be high. I'm not sure. This thing could go to $8. But remember, you're still having a big gap in here, right? You still have a, you know, a huge gap. Right here. So you had one in there, you have one in here. This could still be very simple: a 1, 2, 1, 2, 3, 4, and 5, 4, and 5, and you continue to crash lower. So you can look at it from both ways as an ABC. Again, there's no evidence that this is a C wave and then this is a 3-wave move. You would have to be patient. And I wouldn't, you know, throw money at this thing just because this looks like that. Right? You would have to see some kind of a impulse out of here. You would have to see a 5-wave move. You would have to see this market trend higher for a few months at least. Give you something to work with. Maybe even let it climb all the way to the B wave. Right? Doesn't matter even if you're going to miss some gains in there. You know, what's the point? So unless you're trading short term and you're saying, oh, it's a C wave, let me get a, you know, 10% rally. I don't know if you want to swim in those waters, but it's up to you. What I'm saying is, you know, this might not be over, right? So just because I place these labels, just like I talked about, it doesn't mean that this is the right thing to do, right? So we're going to go back here and, you know, if it's an ABC, right, this could become a much larger, I mean, the 5-wave move in here is clearly going a 1, 2, 3, 4, 5. So that's either an A or a wave 1. Then you go up in either a B or a 2. Now you're doing another 1, 2, 3, 4, 5, maybe of a C, or maybe of a wave 3. You're going to get a 4 and a 5. If it's a 4 and a 5, then you're going to get a 5-wave decline. And that's a little bit problematic because you're going to get a B maybe and a C, or maybe this thing just goes, you know, to $5 or $3 or whatever. So, you know, I'm just kind of running you through some options in here. You know, right here, it's your 1, 2, 3, 4, 5. So let me just do that. 1, 2. So then you have somewhere in here, you have a 3rd wave. Probably a small 4 and a 5, something like that. I think that this sequence in here has got nothing to do with this one. It's a 1, 2 that's gap in 3. So 1, 2, 3, 4, and 5 for that 3 in there. Then you get a 4 and then a 1, 2, 3, 4, and 5 in here to these new lows. And then you pull back up higher in this B wave. Now that B wave went up about 38%, between 38 and 50. And the reason why I'm not placing B wave back here is because I'm looking at this decline in 5 waves, 1, 2, 3, 4, 5. So that's either, it's probably a wave 1. So 1, 2, and then you get another 1, 2, 1, 2, 3, 4. So there might be still some pain to happen in here. Now, pay attention to the equality. This is the equality comes at about 1225 between wave B and wave C. So that's another piece of evidence that you want to watch. You're obviously going to watch some divergence in here, what's going on into the RSI, which is starting to diverge a little bit. So there might be some relief rallies in here. Who knows, right? Maybe it stops right here. Maybe it goes a bit lower. It's probably going to push back a little bit, but don't rush, study. Maybe there's going to be a fourth wave. The market will give you clues in here. Plus, take a look at the moving average. Just look what 21-day moving average is. This thing is not just going to go back all the way up there. Like for what reason, right? It's not like you're going to start throwing billions of dollars in a snap and somebody's going to snatch it and buy it and then shoot it all the way up there. This is not crypto. So this thing would probably take a little bit of time for it to, come back down and form a base. And then it's got to climb back above this one and then climb back above 50. And it's probably going to take, a little bit of time until this, this trend, let's say, maybe resumes higher or it gets better for that reason. But for right now, you're looking at this and it's doesn't even fit anything, right? You have, I'm not even going to put the channel, but at least the top of the trend line, right? That's at least this decline here matters a whole lot. So anyway, I hope this was helpful, guys, and you probably picked up a thing or two in this. Let me know what you think. Please leave me some comments and just tell me what else you want to see. What's bothering you in Elliott Wave, what else, you would like me to talk about and discuss. Maybe you have some interesting charts that you want me to look at. Come in the public program if you don't want to come in the program, in the public Telegram, and just, leave me messages there. Find me on Twitter. I'm on Twitter too, so you can send me charts there and we can discuss further, structures and things like that. But anyway, I appreciate you being here. This turned out to be a long video, 28 minutes, but I loved it. So I'll talk to you later. Bye, everybody.